Hello, I'm Ant Joblin and welcome to Pink Diamond, the show that digs deep into the pink sheet markets to find diamonds in the rough. Now, if I told you there's a stock that's gained 86% this year, would you want to know more? Of course you would. Today's company is Willscot Corporation, a Baltimore-based company that focuses on modular space and portable storage. Services include office furniture rental, transportation and logistics, storage services, and commercial real estate. In short, exactly the sort of company you might expect would do well in a booming jobs market. Willscot has been around since 1944, but only listed on the stock market in 2013. The firm now has a market cap of $1.8 billion, 2,000 employees, and America's largest fleet of quality portable work units, apparently. Looking at the company from a top-down view, we can see that their gross revenue over the past 12 months has been $1.05 billion, with an adjusted EBITDA of $335 million. The firm has 50,000 clients, operates in 120 locations, 90% of their revenue came from within the US, and 90% of their adjusted gross profit came from recurring leasing business. We often talk about the importance of tech companies building subscription client bases. Well, this is no different. Recurring business implies that they have long-term relationships with job creators, and with an American industrial and manufacturing renaissance in full swing, the trend looks to be Willscot's friend. The transformation of this company's fortunes since 2017 has been quite remarkable, with revenue up 140%, adjusted EBITDA up 190%, employees up 85%, and clients up 100%. Looking at their debt structure, they appear to not have any maturity prior to 2022, and 70% of their debt is fixed rate, which they believe gives them ample flexibility looking forward. The firm has a positive balance sheet asset to liability ratio and positive total cash flow from operating activities. Moving to the technicals, we can see that 2019 has been a hell of a ride for Willscot, rallying from all-time lows at the end of 2018 down at $8.21 to printing an all-time high at $18.30. The longer-term trend is positive for the stock right now, and we can see a pattern of higher highs and higher lows supported by rising moving averages. Willscot is currently trading in the upper part of its 52-week range. The S&P 500 is currently trading near a new high, so Willscot is lagging the market slightly. However, the stock has performed better than 65% of the 26 other companies in its sector. We can see over a longer-term time period that the stock has attempted to properly break the $18 mark twice, so a third attempt feels like a reasonable assumption. Traders might pay attention to the resistance zone between $17.47 and $17.99 and a cluster of support levels from $16.82 to $16.60 when sizing up this potential next move. In summary, this is a firm that appears to be in tune with American job creation and the repatriation of industry and manufacturing from overseas. Its finances are positive but could be better, but technically looks quite attractive. 6 Wall Street analysts agree with buy and strong buy recommendations. However, before you do anything, make sure you do your own in-depth analysis. That's all from me. We'll see you next week.